The difference in your payment is going to be $437. So in other words, the payment's going to drop to $1,888. And that's for the first 12 months. And that assumes that you don't refinance during that first 12-month period. After the first 12 payments have been made, then your interest rate is going to go up slightly from 5.5 to 6.5 for the next 12 months, and you're going to save about half as much. So just a little over $200 in savings each month. Again, assuming you don't refinance during that period of time. So the hope is that you can get this lower rate for the first year, maybe 2 years, and as interest rates come back down, which we are really hoping that we see rates by the summer of next year back down into the 4s and maybe 5s, then it might make sense to go ahead and refinance out of the 7.5% interest rate down into a lower interest rate. The good news is there is no prepayment penalty for doing so. So you can take one of these loans, refinance it anytime during the next 12 to 24 months and save yourself a lot of money. One last thing I want to say about the market. So I think a lot of people are under the assumption that the market is getting soft, that sellers are dropping their pricing, and we are seeing some sellers drop their price some, but we're nowhere near a real estate bubble bursting or anything like that. And I'll tell you what, same thing I've been saying over and over again. There are more buyers than there are homes for sale or homes on the market. So there's still a lot of people competing for the same house. So yes, the traffic has slowed down some because the interest rates have priced some people out of the market, but there's still a ton of people needing the home. And if you're looking to buy a home, I would not wait, because by the time all this gets sorted out, the home that you want may not be available to you. So I wouldn't wait too long to go ahead and get a house, find the one you want. Budget for this new interest rate environment. Look at it as a worst case scenario. Hopefully in the next year to 2 years, we're going to see rates come on back down into the 4s or 5s, and you can refinance at that time. If you have any questions, reach out to me. I'll be glad to run payment scenarios for you based on your particular situation and help you figure out what your budget is. The number one thing you don't want to do is you don't want to go into getting a contract on a house and not already be fully pre-approved. And what do I mean by that? Well, a pre-qualification is not worth the paper it's written on. A lender gets some basic information from you. They don't look that closely at your income and assets, and they say, we might be able to get you a loan, so you're pre-qualified. A pre-approval is the only thing I offer. So we're going to look at your income and your assets, and unless there's something outside the norm that we don't know about you, when we give you a pre-approval letter, we are saying we can do this loan for you based on the information you've given us so far. And it's a much stronger thing to have going into looking at homes than a pre-qualification. I hope you've learned something from this. I hope that if you have questions, you'll reach out to me. I'll be glad to talk to you about anything that we've said in this video. Have a great day and God bless.